Is this a new bull market or is this a bear market rally?
So Bruno, you want to start today with the US dollar index. So can you tell us what's been happening there and why it's the focus this morning?
Yes, so let's indeed start with this US dollar index taken over a little bit more than a year on a weekly basis. And what we notice is that since mid-February, we had a decline of the US dollar index from the top of the range basically to the bottom of the range. And we get from an overbought situation in November, December to now an oversold situation. The mirror image of this decline of the US dollar index, for example, is a rising yen, which is probably close to a top if we expect a rebound to happen at the bottom of the range along the stochastics.
And what does this yen strength mean for the Nikkei?
Well, the yen strength obviously is negative for the Nikkei, and while it has been rising here, we see that at the same time the relative strength of the Nikkei versus the S&P 500 has been coming down, making lower highs and lower lows. Also, the rebound since February has been relatively modest, below 18,000, below the previous high here on the way down. And now it's moving down along the weekly stochastics. If by chance, as we expect, the US dollar index is rebounding and the yen is probably a bit toppy, then we should expect 15,000 to be support on the Nikkei.
And has this strength been the same for the euro?
Yes, also a weaker dollar means also a stronger euro, and that was also against euro stocks. And in general, we see that is reflected also in the relative strength index coming down. Also in a small rebound, less than 62% on the Euro stocks, and with the last 4 weeks down on the Euro stocks while the S&P 500 was still rising along the weekly stochastics here. So we hope, that means that there is more downside, but we hope that around 2,700 there will be some support if the dollar rebounds as well.
So if the dollar does rebound, does this mean a lower price for commodities?
Yes, that's usually the correlation which works. Already before the dollar start to rebound, we have some pause in the oil market, which stalled below 42, and in this wide range between 42 and 27, along the coming down stochastics. And if the dollar rebounds a little bit, that will push a little bit more commodities down. We see that the same way, things on copper pausing and moving a bit down. So that implies probably more to see the bottom of the range around the 30s.
And the US energy sector, that's also stopped rising.
That's right. And we mentioned, I think 2 weeks ago, that this long-term descending trend line, and it has been exactly working 3 or 4 weeks ago. Here it stopped the rise, and now it's moving down along the weekly stochastics. That, of course, will not help the S&P on the way up.
And what will the impact of a dollar rebound have on emerging markets?
Well, the link goes through the commodities. If the dollar rebounds, the commodity will be a bit lower. And if the commodities are lower, then the emerging markets, which are based on commodities, are probably stopping to rise. And if we take now the Brazil as the best performer to see what has happening, the strongest market, it has already stalled below this resistance 27, which was a former resistance in October, November, and it's starting to move down. So it's probably not a good idea to chase emerging markets right now if they resume the slide.
And if this rebound stops, is this bad news for the S&P 500?
Well, let's look at the long-term charts of the S&P 500. It has been moving up quite strongly from 1800 now to 2075. These 2075 levels happens to be right on the descending trend line joining the highs, 2030, 2116 and a lower low at 2075. That happens right on cue when the weekly stochastic is overbought and turns down. So that opens up really a decline at least toward the 2000 area. And so when we look at that, we realize that this is important because the whole question during the rebound was, is this a new bull market or is this a bear market rally followed again by new lows or at least a wide trading range, which could be between 1800 and 2000 for quite a few months. And when we look now shorter term on the daily S&P 500, we notice that, yes, the S&P in the last 2 days has reacted along a bearish divergence on daily stochastics, also on daily MACD. So it's really turning nicely and on time, if you wish. Also, the VIX was at 13%. It's rebounding now 15%, quite a steep rise. So it could be one of these rise that we had seen already at the end of December. We need to be quite careful. Now, also speaking of December, we should remember that it was almost 6 weeks until the downtrend resumed after the big move up in October. So here there is no certitude that the move down will be right away in a straight line to 1950 and then to 1800. It could take some more time to range on the way up here between 2050 and 2000. So now it's really a time to monitor these aspects and also to remember that the moving average 200 days is 2011. It's about flat and it was coming down. So if price start to move down, they will move down in the same direction as the moving average 200 days. So that will confirm, if you wish, the fact that we are still in a bear market.
Great, so we'll monitor these and then we can speak next time when you're next in the studio.
With pleasure.
Thank you. That's all from myself and Bruno, but for all the latest updates, do keep clicking back to Dukascopy TV.